Our next guest has made a career, though, out of riding it to big gains. Louis Navellier's newsletter, Emerging Growth, is ranked as the second best over the top 25 years. We consider one of the best. Louis also manages $2.5 billion. He joins us from Florida this afternoon. Welcome to the show. Louis, when you hear headlines and you see them like we did yesterday with new home sales, where it really felt like a punch to the gut in the equity markets, how do you keep yourself in there as a momentum trader?
Well, actually, I'm actually pretty happy right now, because all that's happening is there's a flight to quality, and that's why the leaders are getting even stronger. The stock market's like a race. Early in the race, a lot of people are up near the pack, but as that race goes on, there's fewer people leading. And all that's happening is the stock market's getting smart, and a lot of the best momentum stocks now are techs, and they're going to have stunning second quarter earnings here.
Tech has been outperforming for a while, though, now. So why do you want to get in at some elevated levels?
Well, because they're still cheap by historical standards. They're going to have stunning sales and earnings growth in the second quarter. As tragic as the oil crisis is, or the sovereign debt fears, that has nothing to do with the move to 4G or flash memory or the iPad. Also tech is a great way to play the emerging markets, because we can't stop the global growth. It's happening because China, other parts of Asia, India, Latin America like Brazil, they have a growing middle class. They got a lot of household formation going on, and we can't stop that. And tech is one of the easiest ways to play that boom.
Yeah, you can't stop those fundamentals, but you certainly can cause some fear on the part of consumers who would be going out potentially purchasing those products. Excuse me. When it comes to Apple, what 60% of their sales are coming from international. So you seem to be dismissing any sovereign debt concerns, any concerns about tapping the brakes on Chinese economic growth here.
Yes, China is still the strongest economy. We're very well in their real estate bubble, but they obviously have a growing middle class, and we think they can manage their economic growth. Brazil just grew at 9%. It's the slowest economy is actually India, growing about 7.8%. But everybody loves to get on the internet via their mobile phones. They're getting better and better around the world, and it's just a natural to go with the tech. You know, semiconductor demand was only supposed to be up 19% a month ago, and now they've revised up to about 27% worldwide. So basically what's leading the momentum charge is the cream is rising to the top. The creme de la creme is obviously tech, but a lot of big multinationals that have exposure over there are also doing well too.
Well, you know, everyone knows the Apple story. It's a consumer tech stock. But tell me about why you like SanDisk and why you like integrated silicon solutions. Well,
SanDisk is essentially the flash memory, and obviously something like an iPad has a tremendous amount of flash memory, and they've sold over 3 million in 80 days. All the smartphones have that flash memory. But also what's happening in the solid-state drives are capturing more and more market share. I actually have an Apple with a laptop with a solid-state drive, and that starts faster than my cell phone does. I mean, it's just bam, it starts, and of course the batteries last longer. So SanDisk is well positioned for that, and the iPad will boost their sales well over 70% this next quarter. As far as integrated silicon solutions, that's more the Wi-Fi craze. A lot more devices have Wi-Fi connections, also the smartphone. So it's riding that wave, and that company will also have over 70% sales growth and should have a whopping almost 1,000% earnings growth.
So it seems like the bottom line is you like consumer tech. You're not necessarily, though you mentioned semis, you're not necessarily talking as much about corporate spending on tech products.
No, it's all the great little devices we like. It's just all the great devices we like, and it's being really led by smartphones. But you can see that they're bridging the gap between smartphones and computers with the iPad. And there's a lot of book readers out there. It's a consumer boom, and it's worldwide. It's
a consumer boom. How do you stomach, though, drop like we saw in new home sales and continued concerns about unemployment? Because that bottom line is going to be what the consumer has in their pocketbook.
Well, I'll be very frank with you. I don't like the payroll numbers that are going to be coming up. We are losing state and local jobs. We lost 28,000 in May. There's supplemental funding that's probably not going to go through the Congress to save more state and local jobs, because, you know, part of our stimulus package was to create jobs for firemen and police that the federal government paid, but they're not paying anymore. And of course, those census workers are going to turn down too. Now, traditionally, the census workers are laid off in June. This time might not happen until July. So I'll actually be cringing on the first Friday of August, waiting for that July payroll. We might get through it if we have enough private sector job creation. But no, there's no doubt there's problems out there. But, you know, a lot of people are stuck at home, and tech is one of their highest priorities. And
tech is one of the staples you think they're gonna spend on. I got to leave it there, unfortunately, because we have to take a commercial break. Thank you, Louis, for joining us.